Good morning, everyone. Thank you for joining us for this Venture Capital and Financing panel at Digital Hollywood Spring 2018. And we managed to almost have it all an all-women's venture capital panel, but Saurabh here decided to keep the odds going for the men, and we're grateful to him for that.
He's lucky.
He's very, yeah, we're all very fortunate. I'd like to play my graphic if possible. I can do it? Am I connected?
You should be, yes.
I don't see the connection. It's not what's on my screen. It's not on the...
I know.
I'm meant to do what?
How are we going to do this?
I'm not sure what I can do. Try to play it. Thanks. All right. Yes.
A little slowly.
Thank you.
Get it right?
There we go.
Okay. Thank you so much.
You're very welcome.
It takes a tech company CEO to get this right. All right. So I never really use any slides or any graphics ever at these panels for this particular reason. But I thought this was worth 1,000 words this morning, so I'm going to do it.
It's moving very slowly as it goes. So.
All right,
Oh, there we go. There you go.
And I'll just click enter here.
I think you can just.
Okay,
Want to play it?
yeah, I'm going to play. This is just a 2-second demo of what happened in the cryptocurrency markets and fundraising in the last quarter.
Closer to the microphone, please.
There you go. All right, so this is what happened in the token sales from 2014 to present. And if you look at these first few years, there's literally no token sale going on. Right on top of the slide, it's actually showing you the total market. It's not working.
You got it.
One more time.
It takes two of us to
We'll-
press play.
we'll get there.
All right,
Is it working?
there it is. All right, so this is kind of what happened. There's really not much going on. This is when some of the panelists in my second panel have started talking and presenting on these panels at Digital Hollywood in 2015 about their crypto companies, their blockchain companies, with the tokens associated with them. But in the market, there was just virtually no money raised. And you can kind of read how much that was, like in millions. It starts to be maybe first 15, 20 million in 2017, and now we're getting closer and closer to 2018, and some few $100 million raises happen, and we're still at the tail end of 2017. This is still a very small market, under $500 million. And it's going to be under $500 million until the first half of 2017. That's what's really amazing. And this, what happened right here, is just the second half of 2017. This is 6 months. It went from half to 24 billion. So thank you for bearing with us through that graphical presentation. But the market that we were all in 6 months ago, when I was actually forming this panel, and I've done these panels for quite a few years here at Digital Hollywood, the market that we had when I asked people to speak on the panel and the market that we have today are fundamentally different markets for startups. And so the panel today is going to address a little more the cryptocurrency raises than we originally intended for this particular panel, because everyone is kind of in the space right now, whether we like it or not. So I'm going to start with Saurabh, who actually has raised for a very interesting startup company, and he's going to tell you a little bit about the company himself and just a quick bite about the raise.
Sure. So hi, my name is Saurabh Fruity. I'm the co-founder and CEO of the Fan-Controlled Football League. We're building a brand new indoor American football league, 8 teams all playing in one venue in Las Vegas. And the idea is to really bring together the worlds of esports, fantasy sports, and traditional sports, where fans actually get to make all the decisions for a traditional sports league. And for our 8 teams, fans will actually get a chance to design the teams, branding, logo, name, hire the coaches that run the team, choose the players. These are real players. They played college football. This is real football. And then fans get to call all the plays in real time for each of these teams during the game. We owned a team last year in the Indoor Football League as a proof of concept. It was a 10-team league. Our team, run by the fans, which was the first, as we know, in the world of a fan-controlled professional sports team. The team finished 3rd in offense. The fan-controlled offense finished 3rd, and our quarterback was Rookie of the Year. We had engagement from 100 countries. We had a deal with Twitch and Sports Illustrated, and really feels like we're in the right place at the right time to bring together these kind of worlds of digital gaming and traditional sports. As far as blockchain and token goes, we are integrating blockchain into the new league for a couple of reasons. One is transparency in our voting. We had a couple of votes last year, very public. You can go check out one we had with a guy by the name of Greg Hardy, who played in the NFL and had some domestic violence issues, got kicked out of the NFL. He had a chance to come play for us, but we let fans make the decision to vote, and they voted no. But it was such a close vote, 51 to 49%, that the fans that voted yes didn't believe the vote. They said, "Oh, this was a publicity stunt. You guys, you're never going to bring them in the first place." And there's no way for us to really prove the vote. So for us, that's what led us to blockchain in the first place, was this idea of transparency in the voting process. And then when we really started diving in and understanding tokenization and this opportunity to create and tokenize our entire ecosystem, and what the value that could bring to the league, we thought it made sense to kind of really jump in with both feet. So we're now building the fan token and the league, and we'll be debuting the league next year.
Fascinating.
The Salt Lake Screaming Eagles.
So they're going many teams.
Yeah, we ran it for a year and then decided to build our own league. So
Yeah,
we're
down to what, 5 teams I think this season?
I think that's 6 teams. Yeah, that's right. Yeah.
I used to work for the Soul.
Oh, you did?
Yeah.
Okay.
All right, we got some Uber fans in the audience. I like it. So Trish Calaveras and I went to the same business school, Anderson Business School, and she's now running the Anderson Business School Accelerator, which is really a fascinating, I would say, somewhat of a startup that she's molding into something exciting, because she has a very, very strong branding and marketing and business development background. She ran marketing for X Prize and a bunch of really exciting companies like Amazon, et cetera. So Trish.
Thank you. So my background is really coming through branding, but doing a lot of fundraising through partnerships and gamifying, really the art of fundraising, where really you're trying to create intrinsic value on both sides, regardless of platform or currency. Right now, I have been at Anderson for 8 months. We support student-led startups from across the campus, just not at Anderson. We're a public university. We believe in really social impact, and so therefore serving the community and serving the other students across Anderson we're doing. We were just talking, we have a company right now in the accelerator that is blockchain-based, going through an ICO. They're focused on sports betting because they're a team of guys. And one of the reasons was really to create authenticity around the content and the betting of sports. So we're going to make an intro later today. But I love this. I love the energy. I love the creativity in this space. And these kind of conversations and people I find fascinating. So thank you for your time today.
Yes, thanks for joining us. Corinda Solomon and I go way back, before she was Solomon, I guess. And she was running marketing biz dev for Kariatsu Forum and helping lots of startups there get it to the next level with venture funding. And now she's actually part of one of those teams with FaceMap. But I love this company. It's one of the most exciting companies I've seen last year, because she can actually use this technology, which is AI-based, to analyze the teams that you're putting into your startups and the efficiency of those teams, which is something I'm always looking for. So Corinda.
Yeah. Well, hello, good morning, everyone. I am Corinda. It's a pleasure. Thank you, Mariana, for putting together a wonderfully female majority panel. This is really kind of awesome. My background, I marketing and sat in the seat between the entrepreneurs and investors for 20 years. And figured out how to make things work. 7 years ago, I got connected with one of who I believe to be the most visionary CEOs of our time, one of them at least, and he taught me about delivering happiness and return on a community. From there, I met FaceMap, and we are now a human predictive intelligence-based technology that's basically valued for anyone that has a human face. So we're really excited to move forward in that. We'll be opening up a token raise here shortly. And yeah, just a pleasure to be here. Thank you so much.
Thanks for joining us. And basically what the company does is that it can look at people's faces and analyze their characteristics, both from the business and personal perspectives, if you'd like. But if you're putting together a management team, we used to, call the vendors, suppliers, other people in the business and ask about, whether these people are going to make it as a management team. And the predictability of that was like 1 out of 10, and then we created these networks like Ariatsu Forum or Hollywood Portfolio, these accelerators, incubators, worked with people, and the predictability went to like maybe 7 out of 10, whether the venture is going to succeed once you're in it. And now with FaceMap, you can just increase that predictability of a management team's success even further. Yeah.
For sure. And we've, one thing I do need to mention, because I'm really proud of it, we just received our studies. We did a study with UCLA, where we went into the emergency rooms and cardiovascular department to determine whether or not the methodologies and measurements could actually be reached from a simple photo. We got those results back, and we have a 93% accuracy rate with a 2 to 3% false positive and pre-symptom diagnosis of cardiovascular disease from a photograph. So we're really excited to know that the methodologies can be built, they can be scaled, and yeah, it's going to be an exciting, wild ride.
And this is with something where we don't even think the face matters,
Yeah.
right? Your cardiovascular disease, right? So
Right.
it's quite interesting stuff, yeah.
Yeah.
So Gretchen Fox and I worked at MediaZone, yeah, when we launched this Hulu-like company with a $70 million investment from our parent company, and she was in our marketing group helping us get that whole thing kind of positioned as social television. She's now with a really interesting startup in Silicon Valley, ICOs, and they're doing a coin offering. And tell us a little bit about what you guys are doing.
Sure. So, okay. As a startup, we're always working on our messaging, and I feel like we've finally gotten it to a place that everyone can understand. Like a lot of technology companies, there's a lot of complexity there, but ultimately what we're doing is we're doing two things. One is we're helping create the bridge from off-chain assets to on-chain assets, which right now what's happening is that there's this giant world of software that's powering the whole world, basically, and $2.2 trillion of API economy that currently powers the world of software is not blockchain enabled. And all the dApp developers that are trying to build dApps right now do not have access to that entire world of APIs. And if we're going to get to the promise of blockchain, and we're going to get to this world where we can get dApps up that are up and running. How many of you have actually used a decentralized application? Hardly anybody. So decentralized applications are the apps of the future that we're all going to be using, built on blockchain. The reason that somebody may have used CryptoKitties, the reason that you're not using more of those right now is because they're really hard to make, and there's a lot of missing building blocks to making them. So we're making the entire world of APIs. We're wrapping them with a protocol that makes them enabled for dApp development so that we can get there faster. And then we have a API marketplace that where you can publish and find and buy these new, we call them D-services that work for the digital decentralized applications. So that's what we're doing. We are very, very close to our token sale. We've been working on it for quite some time, and we're preparing for it, and it's supposed to launch on the sort of, what are we calling it now? The early adopters phase, phase 1 in the next 2 weeks, and then kind of deciding, I think September is when we're planning on doing our public sale.
That's really exciting. And Kinsey Cronin and I have been on this panel for quite some time now, I think 3 or 4 years, trying to kind of talk about the fact that crowdfunding is driving the way that we're going to be investing in the future, and it's kind of changing the market. And crowdfunding is now really just morphed into this version of coin, offerings and funding, but you're still going to the crowd. And this crowd is even less protected than the crowd we talked about, over the last 3 years. So tell us a little bit about what Start Engine is doing from that perspective.
Sure. So what Start Engine does is it helps companies make use of Jobs Act laws, which are Regulation A+, Regulation Crowdfunding, Regulation D, 506C, and basically those are the U.S. regulations that allow you to raise capital from lots of non-accredited investors. So if you can think back to Oculus Rift is a really great example in the VR space of a company that was able to raise money after investors or VCs were sort of over VR. It just didn't feel at the time to a lot of VCs like there was much future, or there was the hype. They were sort of in the trough of disillusionment with VR, and they ran a Kickstarter campaign, and they raised a couple $1 million from thousands of backers who were just regular people. At the time, the Jobs Act wasn't in place. It was signed and was being worked on, but it wasn't in effect yet, which meant that all of those investors, or all those backers who backed Oculus Rift when that company went and was acquired by Facebook for over $2 billion, those backers had never been eligible to invest in the company, even though they were able to recognize the value of the company. So only the accredited investors who were wealthy enough to participate in an investment, they had obviously made a great investment, and it's a great story for them. It's a great story for the founders. But for all of those people who recognize the value and who put $500 in, now not only did they not get a piece of that, they also saw that the thing they were backing, the vision, the mission, was going to be absorbed into another company entirely. So it was just gone. And that's what's so cool about this space right now, which, as Mariana mentioned, ICOs and tokens are really taking the place of what we used to call equity crowdfunding. But the fact that so many people are able to recognize value in companies means that maybe it shouldn't always be up to a small group of investors who have some qualification, especially because sometimes they're wrong.
Yeah, so it's a really interesting time, right? Not only that, but I think that there is such a meritocracy happening in these markets right now, as well as, the flip side of that, where a lot of fraudulent activity happens as well because of the opportunistic behavior. But a lot of meritocracy that's going to be available, I would say, in the next few years to companies with real business models who are really looking at the blockchain technology. Maybe we should just explain what that is for a second. So you want to take it? You want to talk about it, Gretchen? Yeah.
Yeah, I'll talk about it. I realized after I had spoken, I've been speaking at a lot of blockchain developer conferences. I'm like, oh, I could probably back up from this. So decentralization, to me, what's happening with decentralization is that we are rebuilding the entire internet in the way that it was supposed to be built the first time. We all wanted the internet to be built in a way that created fairness and freedom and equal access, but the reality was the construct of the internet wasn't designed in a way technologically that could do that. We've seen big players come in and be able to centralize and take control. That's why we've dealt with so much stuff with telecoms and net neutrality, and the new way with the blockchain allows us to rebuild in a way that's decentralized, so ultimately nobody is the owner of the data, the information. And so basically, instead of us storing all the back end of all the software and APIs on a server in a data center somewhere, now it's stored on nodes of everybody's computers that participate in the network. And so this is a much different way, but this is the new way that the entire internet is being rebuilt. And because of that, there's this huge move onto this space and like land grab to try to move there, which is why we're also seeing some of the huge opportunities, but also some bad actors that are taking the opportunity to jump in. I think that's probably the high-level explanation.
Yeah, no, that makes perfect sense. And I think just to add to that, basically the independent coin offerings and blockchain technology is the underlying opportunity there is fundamentally shifting so many different industries at the same time as sort of the platform that it's all sitting on. So all the layers that we developed in the internet space, going digital is kind of that wave of 20 years we've been living. Now we have to reproduce them using this new way of distributing data and information, which is nobody owns it, but everybody owns it because everybody can read it, and it's
Transparent.
Transparent and non-transmutable and all that kind of stuff. So all of a sudden, we have to change every single thing we've done in the last 20 years and create these new companies. I think that's part of what's driving the acceleration. And you can talk about the utility tokens versus the security tokens. So if you're raising on the ICO platform that Kinsey has its Start Engine, you're actually issuing security tokens, and you raised money on Indiegogo using utility.
So for us, because we were an existing company, we had an existing platform. We wanted to build a utility token, and so our token for the fan-controlled football league is the voting power in the league. So as a fan of football, each of our 8 teams will have a leaderboard, and as a fan of your team, the more tokens you have and the more tokens you earn as you interact, the higher up the leaderboard you go, and then the more actual influence you have over your team. So we're kind of gamifying the experience of being a fan and rewarding the fans that are participating the most, and then also rewarding fans that are calling good plays and having good outcomes, right? This is also kind of a wisdom of the crowd type of environment as well. So that's a utility token. We are doing, on our pre-sale, it was, as Kinsey mentioned, we did a 506C Reg D in the United States, Reg S internationally. I think that's the way that everything needs to be done moving forward. I do believe we have to protect people. At the same time, we started off 3 years ago doing a crowdfunding campaign on Indiegogo, as you mentioned. We didn't raise a lot of money. This was just a concept at the time. We said, hey, we want to buy a football team. We want to let fans run it. Who wants to join us? And we had 2,100 people. We raised $70,000. But what it did was it created 2,100 diehard fans that are still with us, right? And so for me, when we looked again at blockchain and as a fundraise, sure, we could go raise venture capital and 2 firms put in $15 million and we're off to the races. But we're building a sports league, and for us, how do we get fans involved early on before the league is even built to then be participants and actually get to benefit from being early adopters? And I think, as she mentioned, to me, that's the beauty of what blockchain and the token allows from a fundraising standpoint, is getting an active community of fans and participants to actually help you build your business. Now, there are plenty of speculators out there that are merely buying it to make money, but there are diehard, passionate fan bases that, and customers that truly believe in what you're building. And if you can find those people, connect with those people, and get them in early, and give them an incentive to be involved early, it really does create some incredible network effects that you can see as your business grows. So that's why we started.
I'm glad that you mentioned that about U.S. raise and international. So it turned out, when I started staffing these panels 6 months ago, and you saw what I was dealing with, right? I started going through, okay, who are my top tier VCs, and places like Anderson, which have super brands, that can actually go out there and put companies through the traditional model. And then in my afternoon panel at 12:30, which is my alternative finance panel, I was bringing all the people that were doing the raises, the coin raises, and they've already done quite a few of them, some people, maybe 75 of them as advisors, et cetera. So it turned out that they're going to be all addressing international raises today, and here we're kind of talking about the U.S. market. So that's kind of what it turned out in 6 months, because the U.S. market has about 4 different governing bodies that are all looking to regulate this market, right? Not just FINRA and SEC, but everybody who has some sort of a financial regulatory capacity is trying to figure out how to participate in this. Goldman Sachs has now launched, I don't know how many different efforts, like half a dozen inventors that are issuing tokens. You have major global companies spending billions to tokenize their frequent user programs. It's like almost like a virus that's spreading faster than even that chart. So the question for Trish, as you go out into the market with this Uber brand, right? Anderson's like one of the top brands if you have an accelerator. How challenging is it today to raise money for these companies, or is it the market still sort of holding as you?
No, it is challenging because from the academic perspective, most of these companies are starting at friends and family. In the 6 months that we work with them, our goal is to get them live or successful. So we have 4 views of success. 1 is a sell, 2 is a seed round, 3 is live and self-financing if it's a product, and 4 is going to another accelerator that actually does equity financing in some sort. If you're the companies that are looking to continue your product development build and you're looking for seed financing, it's competitive. There's a gap right now in the market. And when we talk to the traditional financiers who claim that they want to continue to help startups build their companies, I might bet you're part of the problem right now because you're stopping these companies because they're either, they either want to see more product development, more revenue, or more customers, more paying customers. So what is happening then are these companies are starting to look at alternative means. And it is, thank God, good timing in which they can get involved. And Anderson has also now aggressively starting to support blockchain, the blockchain community and blockchain efforts because it is an ability for these companies to continue to evolve their product and their, really their launch to success.
And access to capital is
Right,
kind of
yeah,
there.
thank you.
It's kind of shifted.
Yes.
Yeah. Yeah, so what are you seeing, Corinne? You guys were doing a strategic raise and venture raise in the last few months. How's that progressing?
Well, I think Trish hit the nail on the head. I think everyone wants to see bigger, better, faster products. They want to see, expectations are really high. I mean, we expect a lot out of companies that are developing technologies. And I think you're right as well. This is the way we should have done it all along. It should have been transparent. There should have been a system. And tokens are really giving us at least a way to do really both. We can do utility and security, and we can get the products up to where they need to be so that then investors are actually, you get to pick your investor in a more educated manner.
And if they're passionate, as both Saurabh and Kinsey were
Yes.
saying, if you create these passionate communities, you can really propel the buildup of the company.
For sure. It's all about the
So
community.
Kinsey, sorry.
I was just going to say also, though, there's the marketing challenge of finding the right investor, because now it isn't just the people that you're meeting with with these traditional VC funding. There are so many different types of people, and you don't want the people that just want to buy a coin and flip a coin immediately. That's not good for your business. So trying to make sure that you're getting the right people that are going to be the diehard fans is a big marketing challenge. Then a lot of people doing token sales are spending a whole bunch of money on marketing to do that job.
Yeah, no, totally. I think that your point, that's a great point, Gretchen, that marketing function, we noticed, like when we were doing even crowdfunding raises, was key in finding your crowd has been the key for at least half a dozen years now, for me at least. That's what I've been doing, trying to figure out how to do that. And Kinsey, I don't know if you've seen this, but I get inundated with emails, with white papers of all sorts of global companies replacing all sorts of ecosystem from genomics to entertainment. I don't know why I'm getting all these other now verticals that I've never really been in that strongly, but the interesting thing about all these emails is that they don't have a business plan. Like the way I've been trained to create plans, there isn't one. Like back to business school, you have to change the curriculum, I think. But so these white papers are just almost like a scientific paper with a little bit more technology, a little less business. Is that what you're seeing, and how do you deal with that?
Yes, we are seeing a lot of that. And I mean, what I think is really interesting is if you're somebody who's going to be interested in reading white papers and making investments based on that, the first thing you want to do is go back and look at some old white papers, like the Bitcoin white paper and some of the earliest ones, because the methodology it was based off of an academic paper style, talked about the technology and the uses and the opportunities. And what I think we've seen now is actually a much watered down version of that for many of these companies. They're basically just saying, oh, this is the format, let me just throw some stuff in. It'll all be really vague. I'm not going to define exactly what this is or how it is. It may be really completely made up. It might not really apply in our industry, in whatever industry it's coming from. And I mean, sometimes blockchain technology is incredible. I think the ways that we've been hearing about it used on this panel so far make it sound like, I mean, which is true, that it is going to be such a community-altering technology. It is, but at this point, we've got this hype where people are just throwing into things it doesn't need to be in. The other day, I heard about a dating app that was blockchain-based. I'm sure there's a ton of them. But the idea of blockchain is that it's a public ledger, that everybody can see everything. So maybe a dating app is not the place that you want your information.
Although I heard it argued that it is because the people, because of the smart contract, there are the people that are bad actors, that are marked as bad actors,
Okay.
basically permanently.
We need them all in the
dating
ledger.
pool.
But then where do they go? I mean, you know,
They
people have
gotta
to have
go
a little
back to the
redemption,
old
right?
world.
Yeah, I don't know where do they go. So you know,
bar.
but more importantly, currently, I think about blockchain technology in most cases today the same way that you might think of a cell phone in the 80s, like clunky, giant, not really working as well as the systems that are probably already in place. So, for example, transacting Bitcoin, compare that to transacting a credit card, it's like seconds to days. So you can't. Now, that doesn't mean that cell phones weren't a great idea that after some development have completely altered how we communicate and how we live. But at the time, you know, putting a cell phone and now putting blockchain into just everything is not going to make sense. So
blockchain for chickens.
Do you have that? There's a lot of tools like what you're talking about with that transition from off-chain assets to on-chain assets. That's really important. And for many companies, so if you want to be an art dealer who is tracking ownership on the blockchain, you need something that can convert your off-chain asset to an on-chain asset before you can do that. So what I do see is a lot of companies who have great businesses and they're making them, in order to get attention and investment, they're creating this whole blockchain angle, and what you can see if you understand their business plan and you see what they're trying to do, that it's just going to slow everything down and it's probably not going to work, and they're going to take perfectly good technology and gum it up.
And money, right?
And money.
They're going and
Your
taking,
money.
Yeah, right.
They're taking funds away from deals that have to be funded and should be funded.
Yeah.
I do want to make a comment, though, because academia was called out for being old school. So,
Not academia, I mean old internet.
and then you pointed at me for being old. So, no, I just want to make a comment that what is interesting, I think, in the world of startups and financing is a mechanism, and it's definitely a necessary evil. However, any business has to have an underlying fundamental. And why you got finance is because you actually had a business model that made sense and works. So regardless of the financing, you still have to look at the business fundamentals. And you are right, I'm seeing companies getting financed without a formal business plan like business school was 20 years ago. And that is pivoting, right? They're looking and saying, okay, how do we do this better? So now it's a business canvas, shorter, briefer, but it's really looking at what's the underlying premise of this company. Does it scale? So you still want to have that rigor, I think, as a founder and in that underlying premise of what you're going to go to market with, because ultimately that's what's going to get looked at. The format of a business plan or a white paper or a business canvas really becomes irrelevant at that point.
Yeah, but I think the problem is we're in this hype cycle, right? So people see over the last 6 months, 12 months, you put in $1,000 and 30 days later you have 10,000. And then you do it again and you have 100,000. And so I think we're seeing on both sides, you're seeing companies and founders trying to take advantage of that by shoving blockchain and shoving a token into their model so they can go raise money. And you're seeing on the other side, investors or mostly speculators that are saying, oh, there's a token, good advisory board. Oh, this guy worked at Amazon for 2 years before he started this company. So his token's going to be 10x when he launches it, right? So I think that is the big problem right now.
It's
is
like education on both sides.
Both sides. It's not just one side. It's both sides. You're taking a lot of first-time entrepreneurs. I've been an entrepreneur for 20 years. I've started multiple companies. I've had successful exits. You know, I've done this before, but I go to all these conferences and I see 25-year-old kids that are like, oh, I'm starting a blockchain project and I'm going to raise $30 million, and saying, okay, well, and I got a white paper. Well, what else do you have? Well, nothing. That's all I need. And I'm like, no, that's not all you need. So I think that's really the problem, is we've got to bring both sides up from an educational standpoint. And I think regulation, I'm not really a fan of regulation, but I think regulation can help on both sides to dampen when people think they can make 10x in 30 days, there's a problem, you shouldn't make 10x in 30 days in anything, right? So unless you're willing to also lose it 99% of the time. So I think that's where we need to get a balance before this thing evens out. And I think we'll get there. I think it's coming. I'm happy there was a correction earlier in the year. I think it maybe changed people's perception that Bitcoin isn't going to go to 500,000 by the end of the year. That's a good thing. This needs to be slow and steady growth. That's how things move.
And what's interesting, I think you mentioned it now, and I got to bring it up. It's if you watch one of these how to invest in cryptocurrency videos, it starts with like, you need 2 of these. Okay, and because you want to write all your passwords and everything in here, you don't want to put it on your computer, you don't want to put it on your cell phone, you don't want to put it on your iPad. Then you need to download the Google authentication mechanism, and then you have to get new email from Switzerland, because our Gmail accounts and all the accounts that have any name you ever used in the last in your existence are not actually going to be non-trackable by the hackers and by the the frauds that's developed. So it's really interesting that if you are deciding to put the money into these deals, into these raises, and you want to actually keep track of it the way you would, my bank account is like 1 click, my investments are 1 click. This is about, a 20-hour procedure to ensure that you actually have this investment, right? This is going to change in the next few months, right? But it just tells you that a lot of what you're saying, it's more of a gamifying of the investment, gambling of your money, et cetera, playing in the market that kind of self-inflated very quickly. There's about 100 blockchain whales. So what are we going to see in the next 6 months, Kinsey? Where are we going?
Well, the first thing I just want to mention Howie coins. Have you guys heard of Howie coins?
Yeah, I bought some.
He didn't buy any because you can't buy them because the SEC created a pretend coin that they launched, and I think that shows a lot of understanding. And it was very funny. They were educating investors on the sort of dangers and just what to be aware of with purchasing coins for speculation, while at the same time trolling all of the scams that are out there. So if you are interested and you don't know that much about it, I definitely recommend going to howiecoins.com and learning a little bit about the SEC's perspective on this stuff. But as far as the future, I'll go specifically on regulation since that's what we specialize and focus in. I think we are going to see some clear regulation or some more clarity coming out of multiple U.S. government entities that are on this right now. I think when I go to sort of blockchain community events, there's an echo chamber often that says like, the government, the U.S. government doesn't like this, doesn't want to do this, wants to dampen it, doesn't understand it, and I don't think any of those things are true. The Jobs Act was passed in 2012, and you see your first ICO in 2013. Now, the Jobs Act hadn't come into effect yet because it was being thoughtfully built. And the reason for that is that the ramifications of what the SEC comes out with are going to be longstanding, and they're going to be massive for the economy in the U.S. So they have to be really careful about this. And just because you don't hear every decision they make immediately, it doesn't mean they're not making those, and they're testing out and modeling out the ultimate possibilities with whatever the regulations are that they decide to finalize in this particular space. So I think in the next 6 months, firstly, I think you're going to see an almost, we've all already, it seems to me, almost completely shifted in thought process. There's still a lot of people who are not ready to accept the idea of security tokens, but in the U.S., I think we're going to see that really be understood as the only way to raise capital. Hopefully more companies will simply raise other types they'll raise in a more traditional way, and then they'll develop blockchain technology, because you don't have to ICO to use blockchain technology. Or they'll find other ways of selling tokens that are used, like Sarabs are used as part of a game. And then I think we will see ultimately, beyond, probably not in the next 6 months, but we'll see a lot of cooperation between governments as well, because ultimately each government in the world is out to protect its own small-time investors. So the accredited investors of all these nations, they're usually let to do what they want. They're trusted with their money. They have a lot of it. They're able to make business decisions. But most nations do not want to allow their everyday people, their commonwealth, to go out and be taken in on internet scams. And so I think you're going to see, you already see a lot of a lot of management coming out of the US, China, the UK, and sometimes people talk about, well, we'll just found ourselves and moved to the Cayman Islands or Singapore or whatever, but your funds aren't going to be able to get to you if you don't follow the rules of the country that you're trying to raise the money in. So that's what I think we're going to be seeing developing over the next 6 months, next few years.
And there are some countries that have already adopted similar to crowdfunding regulations, like you can't invest more than 10% of your income into an independent coin offering. It's already happening globally.
Yeah, and the UK is actually about 5 years ahead of us in equity crowdfunding, and they've had really great results. So I think we'll see similar thought processes.
Yeah, there's like 2/3 are still around of all the companies funded in the UK over the last 6 years through crowdfunding.
It flips it from like 60 to 90% failing to 60% succeeding.
It's amazing, yeah. It's a completely upside, like different model, yeah. So before I go on, how many people are actually raising money for their ventures in this room? Or or helping people raise money, okay. And how many of them are doing a coin offering? Okay, good one. For one. How many are going to do it after the panel? No, I'm just kidding. No, I think you actually...
SEO. You would never do an SEO now. I mean, an ICO, right?
You would never do it?
You mean IPO?
He means security token offering. It's a new word.
Security versus utility.
You'd be set yourself to be, put in jail by the
I respectfully disagree.
I disagree too.
I think you can do a utility token offering if you have a network ready and you have utility value in your token when you sell the token. So it's a big difference, right? If you're going out and selling a utility token and a year later you're launching a network, but you've already issued the token and it's trading on exchanges, that's a big problem. If you sell your token and then people can use the token to do whatever it is you said they can do, you're going to be... Look, I think the governments of the world are not here to stifle innovation, right? They're here to incentivize innovation, but they're also here, as Kitty said, to protect the common man, right? But we also just passed legalized sports betting and probably going to be legal in every state now. So they also let you gamble with your money if you want to, right? So there's definitely a healthy balance between protecting people from scams, which I think that's the SEC's job, that's FINRA's job, that's what these guys are doing. We got to get bad actors out of the space, but when the good guys come in with good projects and common people want to make a bet that they think that particular business or that particular idea is going to work, you should be allowed to do that. And I think that's where the regs are going to take us, is because, look, a security token offering, at the end of the day, the problem with it, you got to be an accredited investor. So what happens? All the rich guys get richer and everybody else gets shut out. And I actually have a big problem with everything moving to security tokens. I hope that's not the way this goes, because if it does, we've got Reg CF and we've got some other things, A+. There's some other ways to invest in those things, but they're cumbersome for companies to do. They're expensive. There's a heavy burden on filings that you have to do. There's a lot of public disclosures. So from a small company to be able to go through that process, it's a challenge. And so I think there's got to be some balance between that and letting companies innovate.
Yeah, so being real and being a real security. I mean, we didn't even talk about the stock versus coin ownership in these deals. I used to always get stock in every deal I was accelerating for 20 years. And now I've met so many companies that say to me, okay, we'll give you tokens. And I'm like, and then what? And they're like, well, you can sell them in 6 months and make 10x. I'm like, okay, and then? And then you don't own anything. But, maybe this should not be a stock company, because this should be one of these companies that never gets sold or never IPOs or never. I'm like, and? I mean, how is this going to change the way we do business? Or is this just another phase in inexperienced people building inside a very sort of tumultuous marketplace?
But Mariana, what you're describing is a security. If the method of sale is that the person believes that the token is going to be worth more money later on a marketplace, and that marketplace is not it has nothing to do with their activity, right? It has only to do with the activity of the company that's creating value. That's a security. So while I do think you can sell, I think there's a great place for utility tokens. It really depends on why a person is buying it. One really easy test that you can do is imagine a Chuck E. Cheese token. It's a utility token. And the reason for that is that Chuck E. Cheese sells them for 25 cents each. So you can't buy some Chuck E. Cheese tokens, hang on to them, and then sell them later for some return. And that's why Chuck E. Cheese doesn't have to register those tokens as securities. If you are selling them with the expectation that the investor has, and this is important, you don't even have to say that they have the expectation. You can put disclosures in your white paper that your lawyer writes and says, oh, by the way, these aren't associated with anything and they mean nothing and they're worth nothing. If the investor has any reason to believe that they're being sold something that's going to go up in value, they have grounds for a lawsuit. And so if you want to pay your lawyers to fight the SEC with you, for you, it's actually a lot more expensive than just registering under a Jobs Act law.
Okay, so let's say it is a security, which I believe it is. Then how is that security going to replace the stocks as securities in these deals, in these startup deals, if at all? That's my question. Like, should you be asking for equity compensation anymore when you help a startup which can't pay you full comp, or should you just be asking for tokens, and why? You know, here's like, what do you guys think?
Not to hog the microphone, but I think I think that what we're seeing from the security token offering is this idea of private companies having tradable equity, right? So that's where this is headed. Like T0 is the big example. I think they raised $250 or $300 million. They're going to bring a security token platform to the market. And what it's allow private companies to do is basically IPO without going through an IPO. You'll be able to list you'll be able to tokenize your equity, list it on a security token exchange. As far as a buyer of those tokens, you will have to be registered, and there's a whole process you have to go through to actually register to actually buy on something like T0. But I think that's where it changes, right? There's a difference between issuing a security token that isn't tied to the value of the company, right? It's just this thing that you use in the network, versus a security token that actually provides actual ownership in the company itself. So as an investor,
advisor, board member of a startup, what should you ask for?
I mean,
just ask, because all these people do that.
I would want securitized. I would want equity security tokens. That's what I would want.
I would want equity and tokens, because it's almost like they're two different types of securities.
Well, no, because in order, you can't have a token that doesn't have any actual defined value be a security. So while what you described as a security, it needs to be
just a different class.
Well, yeah, but then it would have to either have equity or it would have to be a convertible note.
Like A shares and B shares, I'm just getting tokens which are more like short-term securities, like a T-bill, for example.
Well, but it has to pay a dividend, but it has to pay a dividend, or it has to have some sort of,
So in the case of T0, they have a preferred share with a revenue share. So it's a 15%, I think. So, and they're actually on Start Engine's platform. So when you come to, if you want to invest in T0, you do have to be accredited because it's 506C. You come to Start Engine and you go through a process of verifying that you're an accredited investor. And then you either can invest in fiat, I think credit card ACH, or you can invest in Bitcoin or Ethereum. And there's a process that each investor has to go through. And we make that really quick. It happens within a day. But it is a process. And if they were to be going through a different regulation, it would be easier for the investor. So it becomes more work for the company up front to file with the SEC, but the investors have an easier time because they don't have to be accredited. They don't have to verify that information. But so if you wanted a token that was maybe in a preferred share with a revenue share, in that case they would have to share their revenue with you, but they wouldn't dilute themselves as much because it would be a preferred share.
And then the question that I'm having is like, so you look at the stock market, equity, debt, as we have it today, right? And all these hundreds of different formats of equity and debt that we have to trade, right? Are these tokens going to be just replacing those or augmented those or merging with them? That's what I'm asking. Like, what's going to happen with the traditional equity in that market and the token markets?
Well, we're really excited about that. So that's one way that blockchain technology, while I think it's got all of these, it has so many different ways it's going to revolutionize different industries, and I think the equity markets is a huge one, and so that's something that Start Engine is working to participate in. And if you think about the fact is that right now most most stocks are purchased on what we call book entry, so you don't get a stock certificate. It's just logged somewhere, and it's logged with a transfer agent. So what this changes is it changes the way that people access it and the way that the records are kept. But I mean, it's possible that the SEC will change its mind about transfer agents being required, but what I think everyone is planning for right now is that there's simply a double log. So there's the centralized log, which is with the registered transfer agent, which has to qualify. The employees of that transfer agent have to take exams, and there's all sorts of very specific ways that it needs to operate and report on itself. And then the same information is also logged publicly on the ledger.
And I think to your point, I think the idea, at least the way I see it, is we're going to have tokenized ownership of basically everything, right? So even think about like the real estate markets, right? Right now, you got to be a really wealthy guy to own a building in New York City. 5 years from now, you might be able to own one token that represents a very small fraction of a building in New York City, right? Because you can tokenize the equity ownership in the building. So I think that's where the markets are going. And to your point, I think everything is going to move in that direction because it provides liquidity for even things that are normally not liquid.
And also globally, I think we haven't touched it. I mean, there's like so many different areas that we can add some order to the chaos that's going on. But globally, there were a lot of currencies, fiat currencies, not just, you know, stock and bond markets, but the actual currency underlying each market. They were very, very inflated and unusable, and there are countries where you can't even buy food with your currency. I mean, I come from one of those countries. I lived it. So you really, I mean, when you look at our currency, we all sit around here and go, well, why do we want to deal with any sort of issues with SEC and FINRA? We want to go where they go because they've been at this for a long time and they're so well established, and our currency is very strong, et cetera. But if you look at a couple hundred other countries, you know, a lot of the third world countries, they never really had that. They didn't have the order out of chaos. They didn't have the regulation. They didn't have the ability to save money and make money and, you know, invest in all these things and build wealth. So do you think that that's going to be the model that everybody adopts, including U.S., or do you think our model is going to sort of trickle into the other global economy? Because that's really what's happening here. We're stabilizing a global economy.
Was that for me?
Anybody wants to answer it?
I do not know the answer to that question.
I think it'll be a little bit of both. I think we're going to participate in some and lead in some.
Yeah.
I think in this day and age, with tokens, with crowdfunding, with countries being able to invest in each other, that there's going to have to be a middle ground where we conform to some of it, and some of it we set our own regulations for.
Yeah, because we have a lot of global races going on for U.S.-based companies right now. Quincy, you wanted to say that?
Well, it's also just, you know, I can't really predict that because, as we know, there are a lot of Americans that don't really like globalization. So if our financial systems become extremely tied to everywhere else, I don't know what sort of pushback there will be, or what sort of rules and laws will be established to prevent it.
They're not going to have a choice.
Yeah.
And that's what's going to happen. So as you have a company today, and your company is in digital media, hopefully most of us have been in this space forever, and you're saying to yourself, how am I going to raise money, my next round, my Series A, my Series B? Even if you raise the Series A from the VCs, should you go to Series B and do a token sale? You should ask yourself a few questions. One is this a global play? Two is this an ecosystem? Am I going to fundamentally shift the way that business is done for this particular segment of the business? If it's a film slate, it's not a tokenizable business, for example. But if it's a distribution company for media, I advise a company that's going to be on the second panel that distributes film, television, music, VR, AR content globally, wants to give 90% of the value back to the creators. That's a fundamentally changed ecosystem from where we live today, where, you know, basically Netflix pays you money to do something as a salary almost, and, you know, you don't have any upside in the back end. So if you're building one of those companies, yes, you should look at how should I create a blockchain, you know, company, and should I do a coin raise, and what kind of a coin raise should it be based on what everyone said here? Should I put it on Start Engine, et cetera, et cetera. So that's the way I look at the business. You have some thoughts, Kinsey, on this?
No.
I mean, how much of the other raises are you seeing, like other crowdfunding versus tokens, for example?
I mean, it's definitely leaning that way, and we do think that those two worlds will merge. So there's just, it's essentially, it's very similar, it's the same thing, it's really just equity crowdfunding. The SEC didn't know about, didn't know about Bitcoin, wasn't as involved in the the dark net. So as the regulations were coming out, they were basing everything on Kickstarter and Indiegogo. So kind of the format of equity crowdfunding came out, and it looked like Kickstarter and Indiegogo. But I think that the fact that without all these sort of rogue companies that sold tokens and then people were able to make 10x in 30 days, we probably wouldn't have the level of enthusiasm and interest and fascination with the space that we have. So the fact that that happened means that, it needs to be changed, and luckily there's this system already in place. But I think they're both going to need to kind of merge and shift, and I do think we're going to see tokens on pretty much everything.
So there's going to be a little more chaos and then a little bit more order. Okay.
Yeah.
So we'll take one question. We're running out of time for this panel. I have so many questions for these panelists. Anybody wants to ask a question? Yeah, raise your hand, my friend. No? Okay. Michael, thank you.
So, I'm listening to all this. It's really fascinating. Kinsey, you were saying something earlier that triggered something. There's a company called OSIC, which is an audio company. They came out and they did headphones, and they took in, I can't tell if it's over 3 million or over 6 million from not savvy investors, and then they just went up in a poop of smoke, and everybody's out their money, and their explanation sounded a lot like, well, gee, it was more complicated than we thought, and we didn't think that VR was going to take this long. Bottom line, no savvy investor would have put money in. And so we have this democratization, but here it's resulted in a bunch of people losing a bunch of money, and people who probably shouldn't have been investing in the first place. So I kind of wanted to flag that. I just want to get the panel's thought on how we protect those people, or is it just we protect how much you lose?
Like there's 3 million in crowdfunding, like Kickstarter, 3 million outside of that.
Yeah.
So
They just never sounded legit. They didn't sound like they knew what they were doing from the beginning, because people invested in that.
right. So the ways, so it's the regulations that are in place. There's a few different ways. It's both in information provided and transparency, and also in the amount that the person is able to invest. So if your net worth, take a net worth in a yearly versus your yearly income, whichever one is lower, if that's under $100,000, you can invest up to 5% of that number. If it's over $100,000, you can invest up to 10% of that number. So that's the sort of first block, is that you can't lose all your money. And then the second one is that there is very specific ways that the information needs to be outlined under regulation crowdfunding, which allows a company to only raise up to 1.07 million per year. The information is very, very specific. There needs to be a public forum. We can't delete comments. So if somebody goes in and says, hey, this team doesn't seem legit, that's not going to be deleted because the company doesn't like it. You also have to go through a registered funding portal like Start Engine that is a member of FINRA, that's looking out for red flags the whole time. So while there's never a guarantee that any startup is going to be successful or you're ever going to get a return, you're protecting the way the information comes in. In the case of Regulation A+, one of the reasons it's so expensive is that you actually have to get qualified by the SEC. So you have to put together a Form 1A, which is a pretty heavy form. You have to do a 2-year audit, and that has to go to the SEC. They send questions back to you and comments, and you have to go back and forth with them until they're okay with you launching. So again, that doesn't mean the company is going to be successful. It just means that the investors are protected in how much they can put in, and the information and the team. And so if anybody is a bad actor or has any sort of, there's a list of histories, if they have something in a history that's securities fraud, something like that, they're never going to be eligible to raise capital this way. Token world in the U.S., I think, is going to have to accept I mean, there have been like 80 subpoenas sent out to companies that have raised capital the wrong way. If you've seen Banking on Bitcoin, the documentary on Netflix, you can see kind of like early reactions, and you feel for the people that got sent to jail when they were just trying to develop technology. It feels like they weren't really trying to take people, but ultimately they went to jail. And I think we're going to see that happen too for some of the worst actors, and I do think that it's going to be done thoughtfully, and I don't think that the SEC is going to try and just take all these people and dump them all into jail, but I think there's going to be ramifications. And we've already seen it. They've already sent out cease and desist orders. So a company called Munchie, they tried to launch a coin. They put a lot of work into developing that and a lot of marketing costs. They launched it. They raised a little bit of money, and the SEC said stop, and they had to give all the money back. And now I do think we're going to see that kind of involvement.
And I would add just, though, that I think it's up to all the good actors to help educate the public, because just like digital literacy is something that we all have to help educate the public, so is this new way of contributing to tokens.
I'd also just like to say that there are plenty of good actors out there that are going to fail, right? 9 out of 10 companies fail. So you don't have to have bad intentions to fail. We're entrepreneurs. We're going to try some crazy stuff up here, and some of these things might not work, right? So I think you got to be smart about who you make your bets on. Let's keep bad actors out of the space, but at the end of the day, it's always a risk when you're investing in a startup, because these are startups. They're just crazy ideas that we hope are going to hit big, right?
So in terms of just 1 second, maybe a couple of seconds, one sentence, what are you most excited about right now from the perspective of financing, venture capital, coin offerings, whatever? Just like, well, I'm going to start with Trish and then come back.
I'm probably in a different space than these guys, but I think really it gets to what I said earlier, which is really providing greater opportunity for the really early stage startups. It's a difficult place, and they've got guts because they are trying crazy stuff, and I do believe that fundamentally my job is to help some fail faster that should, and then the ones that have the fundamentals and have decent business premise to allow them to continue to grow. Right now, it's a big pain point, and it's something that I'm probably hyper-focused on just for their success.
That's great. Yeah, it's a really interesting space right now, the pure startup space, because of what's going on. Corinda?
I am excited about it. I think we are sitting where we were a few years ago, and I think now we have the means and the knowledge to do it right.
And the technology.
And the technology.
Yeah.
The technology has finally caught up, and we actually, I mean, we're all living in, most of us in this room did not have a computer lab when we were going to high school. I mean, I didn't at least. And so now we're all getting to a point to where we can develop ways to raise funds and actually get it right. And give companies who have the potential and maybe not actually the resources to get those.
Yeah, it's exciting. Gretchen?
I'd say the incentive for really super fans, early adopters, to get back rewards for their participation.
Yeah, fun stuff. Kinsey?
Personally, I'm really excited about the liquidity markets for the ownership in these private companies. I think in the VR AR space, I'm very excited about digital ownership. I think that's going to be really impactful.
And Saurabh?
Yeah, she took the words out of my mouth. I'm actually a big nerd, and I'm really excited about actually the digital collectible market. I think there's going to be a huge move to create some really, really unique art and collectibles and everything. Everyone's going to want to own everything on their phone going forward, and I think that's the true power of what's being built.
And I'm really excited about all the ecosystems that are developing globally, where they're fundamentally allowing consumers and all of us to own our data. I think that's going to be the biggest shift that will actually yield some results and some interesting underlying securities. So thank you. I could have asked another hour of questions to this panel. Thank you for coming, and thank you for joining us first thing in the morning. And see you at 12:30.